Hello, good morning.
our favorite financial planner on the C Morning Show. But Meta, so
Thank you.
how do we choose the right investment? How do we determine which investment is risky and which is most manageable accordingly to our situation?
Well, how to choose the right investment is when it is aligned with your financial goals, with your risk tolerance, and as well with your time horizon. So that's why you have to, the second one, the risk tolerance is the one that you have to look at because like you said, it is sometimes overlooked by the investors. So you have to know your risk profile. Risk profile is an evaluation of your willingness and ability to take risks. So the willingness is about preference. It's very psychological. So think about the emotion you have when you're going to put some money on investment. You want to have profit or returns, but have you ever thought of how much do you want to lose? Nobody thinks of that, right? Right. So if somebody, if you have a strong desire to have a highest possible return and you're willing to endure a large swings during the accounts volatility, so maybe you have a willingness to have a higher return and a higher risk, so it is called a risk taker. Yep.
Right.
But on the other hand, if you don't wish to have risk, if you do not want to lose your money, and you may want to forego your potential appreciation of assets, then maybe your willingness to have risk is very low and you are a risk averter. So that's the first. And then the second one, how to measure your ability to take risks. So that's why you need to do some financial check. You have to check your assets and your liabilities. If you have many assets and a few liabilities, so it means you have ability to take risks. But on the other hand, if you have a high level of liabilities but few assets, so maybe you don't have that high ability to take risks. So that's why you have to manage between your willingness and your ability.
All right, Metta, growing up, maybe many people can relate to this. The best investment advice I got was nabung, nabung, save up and save up. Well, I guess that means to say that it is the least risk. So we were talking about the risk before. What kind of risks are we going to face when we get into investments?
Oh, okay. The risk, the investing itself is maybe risky, right? So the investment risk is the probability or the likelihood of occurrence of losses relative to the expected returns that on a particular investment. So it is a measure of a level of uncertainty of achieving a returns as per the expectation of the investor. So there are many types of risks in investment. I think you mentioned before there is a market risk. Market risk is the risk of investment is declining in value due to economic developments or other events that affects the market, the whole market, right? And also there is a liquidity risk. Liquidity risk is the risk of being unable to sell your investment at fair value and get your money out when you want it. Sometimes you don't know when you need the money, and when you need the money, the market is down. So but you need the liquidity. So that's why you have to measure your ability to take risks. And also there is a credit risk. Credit risk applies to debt investment, like bonds. So it is the risk that when the government entity or a company that issued bonds, they run into a financial difficulties to pay the interest as well to repay the principal at maturity. So it's like a default risk. Yep. And of course, like you said, there's also an inflation risk. There is, the risk of the loss of your purchasing power due to the value of your investment cannot keep up with inflation. So that's why you have to really learn the market as well as the product before you invest.
Okay, but Meta, I want to go straight to one product, say stocks. Say we put our money in stocks and the market always fluctuates. But we don't lose our money once we sell it, right? So if we wait long enough, if we're patient enough, we're bound to get it back. Or how do you explain it to someone who doesn't play stock, who doesn't invest in stocks?
Okay, stocks is an aggressive instrument. it has a high returns, but also a high risk. In investing, it's always, the risk and the return is always aligned. So it's true that you have the highest risk and return. So that's why it is good to invest in stocks if you have a longer time horizons, like for example, over 5 years. Because during the longer term, you have the time to compensate with the risk with the return that you may gain for the longer time. If you see the chart when you invest in stock, the chart is like they're bumpy, but in the long term it is getting higher and higher, right? So in the short term it may be low, but in the long term, like the graphic itself will increase.
All right. All right. So, Meta, we talked about a more risky investment. Is that better for a long term or maybe for a short term? How does one place themselves in these kinds of investment?
Yeah. Well, normally, how to choose an instrument? Again, it depends on the time horizon that you want to invest. Like for example, if you want to invest for short terms, you want to make sure that the value is there when you need it in the short term, right? So you cannot face a high risk. So to invest in the short term, you may choose a steady instrument, a conservative instrument that offers stability. It's a low risk, but of course it has low return. But on the other hand, if you're going to invest for long term, you have the longer time to compensate that risk, right? So in the long term, you want to expect the higher return. So you can choose a higher risk instrument. Like for example, the stock.
Right.
Like so in between, between the short term and the long term, you have the medium term. You can choose a moderate instrument where the risk also moderate. So again, it's important to set your goals, and with the goals, you can set the time horizon that you need. Then you choose the instrument.
All right. So talking about the instruments, Meta, can you tell a few examples of which ones are good for long term, medium term, like you said? What instruments are specific to those?
Okay, so there are three asset types, asset class normally for investors. Yeah, there is cash and cash equivalents, fixed income investments, and then the equities. So for short term, you want some security, so you can choose that you still have the cash, so you can choose like cash equivalence instruments, like certificate of deposits or money market mutual funds. And then for medium term, maybe you can choose a fixed income investment, like bonds or the fixed income mutual funds. So for example, if you buy bonds, it will mature within 3 years, and you will get the return for every month. So that's good way for medium term. But for longer term, you can choose instruments that is more aggressive, like stocks or the equity or the instrument in the equity market.
But Meta, you told us about the risk, but are there any risks that we cannot control?
Oh, of course. There are many risks that we cannot control because, when we invest, it depends on the market, right? When we said about the market risk, the market factors affecting markets are many, one thing it happens in one country and then there's an event, like for example, there is a pandemic, the market will fluctuate beyond our controls. And like for example, there's also a recession risk. Like for example, again, with this pandemic, the recession is still there. We don't know when it is over. So there's still a risk, right? And of course, you said earlier also there is an interest rate risk. The interest rate is managed by the government, but of course, the government always review it every quarter. So it depends also on the market performance, right? And of course, like right now, there will be like political risk as well in the country. we're going to 2024. So maybe the political risk will start heighten up from now on.
So looking at current political and like economical trends, which instruments would you recommend someone who have not invested before to put their money in?
So if you are a beginner for investment, I would suggest that you start from the very beginning. Start with the conservative instruments, and then over time, when you get the habit, when you know when the result, when you can feel the steadiness of the income, the market value increasing, then you can try to go to a higher level of high risk instrument. Maybe you go for different types of like bonds or mutual funds, and then after a few periods, again you understand how it works. You can experience the higher, the low, the profit or the loss, and then you may be getting used to profit and losses, right? And then you can just start to a higher level of risk. So it's good to start at the beginning, and then you have the experience to learn how the market works, how the product works, and how you can manage the risk itself. So that's the most important thing. But again, nowadays there is a possibility of technology. The investing is getting easier, right? So again, you have to choose where to do the investment. Choose the entity, the institution that is legal, right? And is registered and by the authority of government.
But Meta, apart from mutual fund and of course crypto, there's been a trend of people going into ETF. And can you explain a little bit what is ETF? Is it the same as mutual fund?
ETF is similar to mutual fund, but mutual fund usually you buy with the investment managers, right? And it is issued by the asset management company. But ETF is like the mutual funds, but it is sold in the equity market. Like in the bursa modal, yeah. So the ETF is slightly more advanced. So normally people that buy the ETF is the one who has exposure and experience to invest in the capital market.
Okay.
All right.
We sure learned a lot today.
Yes, we did. That has a lot of tips that you're giving us. Thank you very much, Metta. Stay healthy, and we look forward to seeing you again.
Goodbye.
All right. Thank you.
Thank
Bye-bye.
you.